Let's dive into the latest updates on SoFi, especially their Q3 earnings and key takeaways. SoFi has been one of those highly watched companies, and their recent earnings release has certainly caught the market's attention. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi recently experienced a price dip, closing down by about 6.43%. Interestingly, the pre-market saw a price spike near $11.99 thanks to the release of strong financials. These numbers are impressive, and for those who followed SoFi, it's clear that this company continues to set growth records. Year over year, their products have grown by 35%, with financial services and lending seeing a 31% increase. These are major milestones for SoFi, proving they are on an upward trajectory. However, with that growth, there's also been considerable attention from short sellers, which likely contributed to the market volatility around SoFi's earnings day. Some reports indicated a surge in short interest, meaning that sellers were betting against the stock. Even so, the company's overall performance signals solid growth. The real reason behind the sell-off, though, could be linked to market expectations. SoFi's hype in the market meant that any deviation from perfection could lead to pullbacks, and that's likely what happened here. The numbers speak for themselves. SoFi has a history of consistently delivering record-breaking revenue growth. They've reported 17 out of 19 quarters with revenue increases, despite facing various economic challenges, including a global pandemic, significant interest rate changes, and setbacks in their student loan refinancing business. Given these challenges, SoFi's resilience stands out. They've managed to keep growing and expanding their product offerings, proving they are here to stay. Another factor that likely influenced the stock's performance was the release of new data on job openings, known as the JOLTS report. The numbers came in at 7.4 million, a decrease from the expected 7.8 million, suggesting a slight easing in the broader labor market. This was something that the Federal Reserve has been monitoring closely, as labor market changes could have ripple effects across various sectors, including financial services. One notable aspect of SoFi's performance is the positive future guidance they issued. This is something we'll be unpacking in greater detail, as it shows confidence from the company's leadership about their trajectory. The guidance and earnings transcript indicate a lot of good things, though I haven't yet gone through every detail. I'll cover it in a future video, but from what's available, the highlights are definitely worth noting. SoFi has had to navigate a lot of ups and downs, and their recent earnings report reflects both resilience and innovation. In their statement, SoFi shared that they've managed to achieve consistent growth in revenue and customer acquisition, even as the landscape has shifted dramatically over the past few years. They've continued to weather storms and find new ways to expand their customer base. Market expectations for SoFi are high, and that's understandable, considering their track record. They're positioned as a major player in financial services, offering a diverse range of products from lending to financial management. However, this kind of growth means that any slight slip can lead to reactions in the stock market, which is exactly what we're seeing. The stock may have taken a hit, but the company itself is showing robust growth and adaptability. Turning to options activity, we saw quite a bit of interest here. Approximately $41 million were placed in call options, which are bets that the stock price will rise, versus $13 million in put options, which are bets on a price decrease. The consensus among these calls seems to indicate an expected price around the $12 mark, which reflects a fairly optimistic outlook among traders. What's also interesting is how the company is viewed compared to others. For example, if we look at another company in the technology sector, Palantir, SoFi appears quite undervalued in comparison. While Palantir's price-to-sales ratio is around 40, SoFi's is roughly 4.5. This discrepancy suggests that the market may not fully appreciate SoFi's growth potential and business model. Given the data, it seems that SoFi's stock has a lot of room to grow if it's valued similarly to comparable companies in its field. Now let's talk about some of the market transactions that took place following the earnings release. Early in the trading day, there was significant buying activity, but later a wave of selling took place. Large transactions over $100,000 were reported, with both individual and institutional investors reacting to the earnings report. In after-hours trading, there was continued buying activity, indicating that some big players in the market are still bullish on SoFi despite the recent price dip. If you're among those who bought the dip, it's worth noting that big money seems to agree with you. After the dip, we saw substantial after-hours purchases, suggesting that major investors see long-term potential in SoFi. It's possible that institutional investors are recognizing that the recent price movements are more reflective of market volatility than of any underlying issue with the company itself. SoFi's current stock price is hovering between key support and resistance levels, and these levels will be important to watch moving forward. It had a recent low around $9.77, a point at which it bounced back up, showing some resilience. Although some additional consolidation could happen in the near term, the company's underlying strength suggests that this isn't a cause for major concern. The upcoming days may bring additional updates from major financial institutions, and their ratings will be interesting to watch. Analysts at firms like Jefferies and Mizuho have reaffirmed their buy ratings on SoFi, and other analysts are expected to release their views soon. The consensus price target remains around $8.71, representing some downside based on current prices, but many investors expect further positive updates that could shift these ratings upwards. So what can we take away from all of this? SoFi's Q3 results show that they're on a strong growth path. The market's reaction, while turbulent, doesn't necessarily reflect the fundamental value of the company. As SoFi continues to release products, expand their offerings, and gain new customers, they're positioning themselves as a powerful player in the financial sector. Their stock may have ups and downs, but the company itself is demonstrating consistent performance. It's always important to look beyond short-term price movements and focus on the big picture. SoFi's growth, resilience, and future guidance all paint a picture of a company with solid fundamentals and an upward trajectory. The short-term fluctuations we're seeing now are more likely related to market dynamics than any real issue with the company. In closing, SoFi has released strong results and provided optimistic guidance, making them a stock to keep an eye on. Their ability to deliver growth, even in challenging economic conditions, shows that they have a business model that's built to last. The market might not fully appreciate their value right now, but for long-term investors, SoFi remains a compelling opportunity. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.